All right, welcome back, you guys. I know last week we just did our first live stream of the closing bell. Today it is Wednesday again, May the 7th of 2025. And I know we just started off with giving you guys an idea of what the STAX software, what we've got coming in the final moments before the final bell. So I do want to point out, I know right now we're showing everything. But what I like to do, especially when I'm trying to do my analysis, is I like to make sure that we go ahead and filter for the buys. So we'll do that and let it filter out what we see here. And you'll see, especially near the end of the day, what will draw our eye toward it is these big money situations. Anything that is over $1 million immediately gets this golden bar highlight, which makes it easy for us to identify what they're spending lots of, millions of dollars on. For the last 30 minutes before close, we saw a lot of QQQ puts that came in. We saw this MicroStrategy one, fairly short term, just for the end of the month. Spent $1 million on that. SPY puts, SMCI, SPY calls in these situations, two of them for fairly big. And keep in mind, these are very short term. This is just for the end of the week, and this for the end of next week. They are in the money, which is a little bit of a safer play, so keep that in mind. We got Apple puts, QQQ, and we've just seen some NVIDIA and QQQ calls that just came in. Now, another thing that also helps a lot here, I like to go in here and reset my grid. Take a quick peek over here at our flow scanner. I love this tool. This tool, not only can we go, it's already filtered for the week, so from Monday to today, Wednesday, and we can see that overall for the week, we're leaning heavy on the calls for QQQ, Tesla, Alibaba, Amazon as well. You'll see HD, AMD, Google. Now, keep in mind, we always want to compare the numbers here. Here, let me make sure real quick. Show you guys my cursor on here. That makes it a little bit easier. There we go. We're seeing, where do we see the heavy bias? Well, HD, for example, right here, $21 million to the $0 of puts. So that shows a heavy upside bias there. Same with Amazon. Amazon 26 million to the 3.9 million puts. So just as well. Baba, Tesla. It's the ones where you have them fairly equal, where it's a little less certain. But again, here UNH, MA. I love to do this where I go and I take my total puts and I filter to see, okay, HD, MA, TOST, Run, XYZ are all getting heavy call favoritism. And you can even go in here and you can take a look as to these contracts and filter for them up top to see what exactly it is that they were buying. Now, I do want to take a moment today. Max, or you guys know him as Trades&Gains or Unusual Markets, he will be joining us in a little bit. But let's just go over a little bit of what it means when you see all these signals. I have this STAX signals chart that I've put together. It's a little bit of a reference guide. For those of you familiar with options, you should understand that options have, they all have their risk to them. Instead of buying the stock itself, instead of buying the equity, you have a bit of risk with the fact that if things do not go your way, there are certain levels where it's actually going to be detrimental. It's going to be very bad for your portfolio if it goes below certain levels or goes against you in certain ways. Also, if price goes in your favorite direction, if you pick calls, it goes up. You pick puts, it goes down. It does not always mean that your premium's going to go up. Does not always mean that options contract's going to make money. So what we've got here is we've got how you can see on the top box, we've got the conditions of lower risk to higher or extreme risk. What you can see here, let me go back into that TOST, or actually, what was it? We'll use STAX AI as an example. All right, STAX AI on the left here, we'll see long term, meaning they've purchased quite a bit of some time, so they've got at least 90 days or 3 months before the expiration. Out of the money, meaning that their strike is outside of the current, it's above the current spot price. It's a FAR target, meaning that they're expecting at least a 10% move. Big money, meaning that they spent over $1 million on this options contract. And what we get here is this STAX AI or interesting flow symbol that we use to note that this is something to keep an eye out for. Now you guys can also see on the left side down over here, STAX AI here has picked out these ones considered long-term leverage. I can't get my cursor on the image here, but you'll see long-term leverage. And in these situations, it is a fairly high-risk situation, but you have to remember, why is it that we've got big money getting into these positions? Why is it that they're deciding to purchase at these prices? Gives us a little bit of hint and a little bit of insight as to what big money and the institutions are doing. So as we continue into today's closing bell, want to make sure you guys see this here. What are they buying? I'm noticing quite a bit of the QQQ puts. I'm guessing they see tech headed down a little bit. We did have FOMC. We do have a little bit of news today. Max and I will go over that as soon as he joins us on the stream. Just before Max does join us here, I do want to give you guys a couple of quick reminders too. We do have right now, if you're in the San Francisco Bay Area, if you are, on the road and you see one of these Samtrans vehicles running around, and you notice Chemo's face and the ICC logo on there, go ahead, snap a picture, tag us on Instagram and social media. And when you do, we're going to make sure we send you guys over a little bit, give you guys a little bit of a reward for helping us out, for tagging us. Make sure you share it on your story. Follow these 4 things that I've put up here on the screen. In addition, I do believe we have 1 or 2 spots left. I'll have to double check after the stream, but we do have a spot left for you guys. If you guys are interested in signing up for STAX Flow, it's $25 for your first month. Use the code 125 when you go into investorcentralclub.com/memberships. It is a great deal. I do know a lot of other flow companies out there that do a great job, but you got to understand, some of them are charging almost 10 times the price of what we do here. So please go ahead, if you are interested, go ahead and take advantage of this great deal. Last but not least, if you guys are interested in sending us some questions, if you have anything that arise during this stream, please don't hesitate. Message us, send us an email on help@investorcentralclub.com. If you're watching right now, listening in, go ahead and leave me a comment and on the chat. I am monitoring it right now. Comment STAX for me right here. That way I know you guys are actively listening and paying attention to what we have to say here. Always happy to do this for you guys and helping you guys understand what's going on with these crazy markets nowadays. All right. I also have, let's go in here too. Max should be joining us in just a moment, but I wanted to go and discuss real quick. I just did finish a couple months of back testing. There's still a little bit that I do have to update for you guys, but we did see a pretty awesome return on last month's back test for the month of April. What you'll see here are the prints that we saw for the month of April. There were 29 total prints. We're counting 25 of them as a win. You'll see these right here. Technically, I could call it 28, but these ones are just a little over 1% and 6% here. So we're going to call those a wash right now. They're not going to count as a win just yet, but not exactly as a miss either. On average for the month of April, we're looking at a 71% average return. Pretty awesome for you guys. Actually, one of our higher months in terms of, at the end of the month. Sometimes a couple of these do take a little bit longer for them to reach their highs. And if you do take a quick peek over here, this is the number of days that they've purchased. The number of days they've purchased on their options contract. A lot of them are actually looking for the end of 2025 or even beginning of 2026. We've got a couple scattered throughout for the end of 2026 as well. So they've bought quite a bit of time here. One quick question I know that somebody just messaged in our Discord. Does STAX AI ever give buy or sell puts or sell the calls? In this case, no. We've set it up to find out when they're getting into these extremely high risk type of positions, and that's when they're buying these calls. We have seen one put come in before. They got into a Tesla put a while ago, which did bank pretty well. But since then, everything that we've seen here have just been these very unusual and big money calls that you'll see. One little hint though too, let me find one in here. Let's just take this Uber position here. And one thing that you can do, so for example, this Uber position was for the 25th. And we're just gonna go look back here on this. And you see here, this big bar on this is going to be a situation where you'll notice a very large volume, 5,369, right? So if I take a look over here, 5,000, that's how many they've gotten in on that position. So at the end of the day, what we're looking for a hint that they might be getting out is if we see that big bar show up again somewhere else. So let's go into another position here. Let's see, I'm gonna go a little bit further back here. Let's look at this Palantir position here. Palantir has gone up quite a bit. We'll go in here, filter for the last 6 months. Palantir position here was for 2/20, so that's back in over here. You see this big bar? Now we haven't seen any volume quite like that. You'll notice. So we see a few 507. So it's possible they might have gotten out of that position. But if this is where they got in under, maybe they got out half of their position over here to mitigate their risk, and then maybe sold off some more back up here. But again, we can also take a quick peek at the open interest and get an idea if they might still be in that position. So use the volume bars in there to get an idea of what's going on. All right, I've got 1 second. Let's see. Let's go ahead and Max just joined us here. Let me go ahead and add him in here.
What is
all right? Let me see. Can I hear you?
Yeah, can you hear me?
Yes.
On that end?
All right.
Perfect.
If you guys in the stream can't hear him, please let me know. Please leave a message in that chat box, and we'll make sure we get that fixed up. How you doing today? Good?
Yeah, I'm good. I'm tired, but we made 100% on Tiva, so good day.
Very good day. Tiva, one of our positions here. Let me just show you guys real quick. We had a Tiva call out over here on the 22nd. This, as of today, if I were to go point this out real quick, we did just have earnings. Tiva now looking at what, over $3 is where it would be at. So if I were to update this for you guys real quick here, $3 or 305 was where it was. 104% for today. So again, that brings our average for this month up to 72.59%. So again, you guys can see. And if I wanted to give you guys a hint too as well, did they get out of it? It doesn't quite look like they're out of it just yet. We'll have to wait for it to update tomorrow, see if open interest did drop. But the volume for today was actually fairly low. So it doesn't quite look like they've even gotten out of that position just yet. All right. I haven't even done the earnings review just yet. I wanted to make sure we talk a little bit about the Fed decisions. Max, do you want to take over for a moment here? And let's go over what you have to say.
Yeah, so we had FOMC today. Let's go ahead and I always look at the Wells Fargo key takeaways because they kind of summarize it very neatly. So it looks like federal FOMC today, we're leaving rates unchanged at the 4.25% to 4.5% level.
Which was expected, right?
Oh, yeah, no, I think no one was expecting to cut rates. And if anybody was, again, like we kind of have discussed, we would have had another episode of buyer's remorse in August with a bunch of Fed members coming out. We shouldn't have done that like we did last year. So if anything, this just shows that maybe they learned their lesson from last time about cutting a little too aggressively, a little too much. But it's also a very different circumstance with tariffs, with us being even further away from that. Because I think people forget we need to be near 2%. And when we get these like numbers coming in at like 2.8, 2.5, and all of these other things, then there's nothing it kind of puts you in a corner. And then also the other thing to consider is GDP growth keeps getting revised, which is not a good sign, because I think at the beginning of the year we were looking at 1.8%, and then the last reading was like negative 0.2 or negative like something. So we've already swung 3% in the wrong direction for GDP growth, which is another determining factor, fun fact, of FOMC. Another thing to note is housing has nothing to do with this. Against popular opinion, housing rates and interest rates from the Fed, no correlation whatsoever. So let's see. We have stated reasons. Recent indicators show that economic activity has continued to expand at a solid pace. The unemployment rate has stabilized at a low level in recent months, which is true, and labor market conditions remain solid. But inflation, as we mentioned, is still elevated. I think with jobs, it's just because companies can't afford to pay people, so you don't have people leaving or willing to file for unemployment until they find something new. Looking forward, it looks like in assessing the appropriate stance of monetary policy, the committee will continue to monitor the implications of incoming information. So the same shit they say every FOMC meeting, so nothing new there. And again, it's going to be the same conditions: labor market, inflation expectations, financial and international developments as well. And I think that's maybe a new thing just because, especially with the international developments, because we need to see what happens with China, because there's really been no progress there, despite people saying that there is progress, which we find out isn't true about every other hour.
Yeah, another thing too is keep in mind, Powell has continuously said over and over the two main goals that they have are stable prices and stable employment, right?
Mm-hmm.
And it looks like the labor market's actually doing fairly well. And even though we do keep hearing about layoffs, we see about a lot of people, losing their jobs and things like that, but it hasn't quite been, a huge shock to the economy that we might be expecting. Another thing is just the fact that last time we did cut rates, and now we're seeing inflation come back to bite us in the ass. As much as he continues to say we're aiming for 2% inflation, I feel like that's kind of a pipe dream. I don't believe that with what's going on with the amount of money in our system right now, the fact that we will very likely be forced to print at some point or another. Inflation, one thing I've noticed him saying is that we're aiming for that inflation to be I forgot the exact words, but like a bit above or in the range of 2%. So I wouldn't be surprised if we find it stabilize around 2.5 to 3 actually. At this rate, I do not believe that we're necessarily going to get it down to 2 unless we really in a sense, wreck the economy by raising rates even, and putting more downward pressure upon that inflation. So at the end of the day, it's interesting to see, the U.S. or the Fed is kind of backed themselves into a corner by trying to appease what people wanted back then, by cutting rates so early. And as much as President Trump keeps pushing for more rate cuts, if that did happen, let's just say, for example, they did decide to cut the rates today, we would see inflation come back to bite us even harder. And at some point, they would have to raise rates to such an extreme level to suppress that inflation. So at this point, keeping it stable isn't a bad idea. We got to see more data come in. We got to see what happens in the future. There's a lot of downward pressure upon economic growth right now, just due to the tariffs and everything like that. So only time will tell. Obviously, we did get the news just yesterday that they are discussing some trade talks. China just came to the table, and it was confirmed by China as well. I want to make sure that we understand there's been a lot of noise on our side where we see reports of something happening and then China saying that it's not happening, that no, there are no reports, no, we have not come to the table. But yesterday was the first time where China actually confirmed and said, yes, we are discussing some trade talks at this point. The other thing I want to make sure that we understand too, India just attacked Pakistan, right? And we just saw that yesterday, which is just creating additional uncertainty in the markets as well. You have to understand that there was a lot of talk about corporations moving their production from China to India. And so now if there's going to be geopolitical unrest in those areas, it also puts more uncertainty into these corporate unfortunately, I hate to say it, but at the end of the day, it's as we have people that are going to be fighting for their lives, corporations are just worried about their bottom line here. And that's what they're aiming for there, is understanding that now if this is going to be going on, if there's going to be political unrest there, do these companies necessarily want to move all of their production over? Do they, Apple talking about moving their iPhone production over to India, that might get put a pause on, at least for now. So we'll have to see what ends up happening in those situations. Like I said, only time will tell. But again, unfortunate situations like that and unfortunate political situations that lead to this type of thing.
Yeah, and I think Apple is going to get hit with that news because they are attempting to move a lot of their production over to India, as we mentioned in our last week. So Apple is going to be something interesting to kind of watch, because they're kind of I feel like they're kind of the North Star of, okay, should we actually move production to India at the end of the day?
They will be the leader in that industry of whether or not people decide that it's somewhere to the direction to continue to take, or if they're going to put a pause on it.
Yeah.
Okay, let's see. What do we? I was just looking at the tape before you logged on. Last couple minutes before we started to see, I was over here. I was taking a look at the big money. Aside from these two SPY calls that are aimed for the end of this week and next week, the majority of what I was seeing was actually mostly puts. We saw this big chunk of QQQ puts for July. All right, we see a couple $1 million being dropped in here. We saw QQQ, another QQQ, SPY, IWM, these ones that came in after market close. Just a lot of these kind of scattered throughout. Earlier today, we did see some heavy buying in BABA. This one, $36 million on that one. And one thing to keep in mind, that one being out of the money is very significant, meaning that, again, $140 while the spot right now is at, what was it? Oh, oh, there we go. 123. So it's not too far out of the money. It is 13%, but 140 is something that Baba has had as its price before. But they're purchasing for January of 2027. So could be a very long-term situation that they're aiming for. Let's take a quick look. Somebody just said AppLovin. Oh, AppLovin just jumped up today after earnings.
Mm-hmm.
Let's take a quick peek over here, see if there's anything that was said in STAX.
For app?
Yeah. Well, we did have the puts earlier today, but look at this one. 5 mil, right? These two people, oh my God, 300. Yeah, these people are looking well in the money. They just got a $50 jump on this one today, right? This morning purchased at about 45 minutes after market open. Spent about $10 million there on the 300 strike. And right now, AppLovin, let me show you guys here. AppLovin just took a huge jump over their earnings at 350. So those ones are going to look real pretty tomorrow. Real pretty.
Oh, yeah. Yeah, that spot's nice too.
Yep.
They bought their first buy was at 298.64.
Yep. Expensive purchase,
Oh.
but you got to understand for the end of the week, yeah, these are looking at the minimum. If it holds that $50, 350. This is looking at almost 100% return. Could be a bit higher if you consider the consider the volatility tomorrow morning. But if it's at the strike 300 and it's trading at 350, this is going to be worth at least 50. So,
Yeah.
solid position for them.
Let's see. Yeah. Because I'm just looking at our big money for app. Yeah, I mean, only 3 orders came in for app, of which 2 are big money, and then someone bought puts.
Yeah.
Could have been a straddle, maybe.
Yeah, but look at that. Look at the amount of premium for that put. If
Yeah,
you're
I
spending
know. Only
$10 million,
$200K.
yeah, $10 million on the calls, and then you spend $200K, right? That's nothing.
On puts for
right?
insurance.
Exactly. That's not even considered. That's like 2% of what you put in. So, I've heard from some people that app has what was it? They've got integrated some sort of AI into their sales pipeline. So they've got, I wouldn't be surprised if that was part of their earnings, and in terms of what they've, what they're poised to do and what their outlook looks like. So, good to see some strong tech earnings coming in.
Let's see.
What else do we? Yeah, what else do we got here today? You got Carvana, ARM, DoorDash, and Oxy. Let's go ahead and take a look at those real quick.
All right, Carvana. I know we've had some interest. We've had a lot of unusual flow for Carvana.
Mm-hmm.
Like over the last month. So that's going to be really interesting to see how that plays out. I'm very, very interested to see how Carvana is going to play out, because we've had a lot of interesting flow, especially last week, with some unusual activity with that ticker in specific. Oh, whoops, I spelled that completely wrong.
Carvana just dropped. It's not terrible so far, but it dropped so far. If you go from the highs, $18, about 6%, almost 7%. Now trading at 246. So nothing. Not a crazy drop, but still, it's dropped back to where it was probably about last week. But I will point out right now, like, you can always pick out a couple of names in the market that are always doing some unusual price trading.
Yeah.
Carvana, if I take a quick peek over here, price to earnings ratio is at 164. Okay. I'll point out this one, Carvana and Palantir. Very unusual. Nothing in trading illogically, if you might might understand.
Oh
Um,
yeah. I mean, Carvana's just reported like 12 minutes ago. Their EPS came in at $1.51 versus 67 cents.
yeah.
And then revenue came in at 4.23 billion versus 3.98 billion. Online used vehicle, they reported a 46% increase in year-over-year sales. Um, they're also reported records of net income of 373 million um, over here. So, I mean, yeah, in my head, this doesn't make sense.
Well, I mean, the we always know if just because earnings is a double beat does not mean price is going to go up. um, Carvana in itself has already had this ridiculous run up. We had our accumulation zone back in 22, and we've now run up to this area here. I wouldn't necessarily say this is exactly a top for Carvana. It doesn't quite look like we've had a buying climax necessarily. It could
Yeah.
be a reaccumulation zone. So, you know, we do have a gap to fill that we're about to approach right here. Um, and it could see a little bit higher before it determines. But right now, obviously, if you're a fundamental, earnings type of trader, this 164 PE ratio doesn't really quite make any sense at this point. But again, markets can continue to be irrational longer than you can stay liquid. So please remember, place your stop losses. Understand that this doesn't have to quite make sense at this point, but sooner or later it does come back down to earth or starts to, return to its law of averages, if you may.
I mean, it looks like it's in a pretty good supply and demand zone
Yeah,
where it could fill some gaps, like where that top wick is at what, 280
yeah.
about
Well,
290.
it's actually that top wick is actually higher than 300. It's 310 is what the highest it's
Oh
gone.
wow.
But I what I notice here is it's in this little zone right now. Right, this little blue zone that I just marked off for you guys. It did peak up above it here, drop down below here, took out the liquidity on both sides. And if the company continues to, to do well, definitely can see it go higher. We'll have to see. But used cars, definitely a strong market. You guys will actually notice the thing about Carvana was back in, during the times of COVID, it shot up crazy. It shot up over here to 370. What was it? Yeah, 360, almost 370. Yeah, 376 was its high. But it went through a full distribution phase and then reaccumulated down. Think of it this way: if you bought in here around the $3 to $4 range, down where it was accumulating in 2023, you're looking at $200, $300 right now. That's 100%, almost. Oh, sorry, it's 100x almost if you consider it. So, pretty crazy chart to take a look at. But again, Wyckoff characteristics, distribution, redistribution, accumulation. I do think right now we're going through a bit of a reaccumulation type of zone. So in due time, I wouldn't be surprised to see it head back up over 300.
Yeah, I definitely see it going back up over 300. I mean, even looking at this week's action, all of our the only thing that was bought, which someone got paid out on, were $1.32 million on $250 puts, where we had some big money. But before that, we had a barrage of calls at the 330 level coming in at, let's call it, over 1.5 million in 330 calls due for June 20th.
Mm-hmm.
So I'd expect a recovery here because one thing you have to keep in mind, used cars will not have the same impacts with tariffs
Mm-hmm.
because remember, those tariffs are only affecting new cars.
Yes.
Now, granted, they may have a supply issue with used cars, but Carvana is really well poised. And another good sign is they did not in their newsletter or whatever they call it. They never mentioned anything about tariff impact on business moving forward.
Well,
So,
actually, here's a quick thought too. Tariffs
yeah.
are going to decrease the supply, or actually, tariffs are going to increase the price of new cars. Okay, so
Hmm.
imagine the dealership prices are going to go up. What that also does is it lowers the supply of used cars because there are fewer cars out there, fewer people trading their cars, fewer people buying those new cars, and more people holding on to used cars.
Yep.
Therefore, the supply of used cars are going to start to go down. What that
Yeah.
also means is that if demand stays the same, people still need their cars. Cars are going to break down. We're still going to need to continue to purchase these. That's only actually going to decrease the supply of the cars that Carvana has ready for sale, which actually can create higher prices for them and a higher bit of margin. So the
Yeah.
tariffs, even though they are impacting the new car market, at this point, I would actually say, for example, we've got a Carvana down here right off the highway. I like to always peek over and see how many cars are standing in their inventory. There
Yeah.
was a point during COVID where it was completely full, and then all of a sudden it was completely empty. And using that to kind of gauge, hey, what's going on? It's like a vending machine display for you guys to get an idea of. And also peek over at the dealerships nearby. Look at what the used car lot looks like. Not just the new car part of it, but the used car. I know, we have a lot of auto malls in certain areas of America. Go drive through, take a quick peek over there to see what it's starting to look like. So,
Yeah, no,
just an
I
idea.
agree. I mean, I think that is the one thing they did mention is used car prices will probably go up because that's what people are going to flock to. And then that's going to your point, end up increasing the value of those used cars. So that 2018 Volvo that you were looking at for 14 grand may be worth 20 now, even though it's not worth 20. But just based off of demand and supply, that's what it's going to be at. And then if that's the case, it looks like it could put it in a weird spot though, like housing. Housing looks like it's always up, but when you look at the interest rates, it's really not. It's up for people who can afford it at the end of the day, not for more so the general public, which is going to have a bigger impact on how many units they're actually moving. Because unless they have limo companies or car services buying out the cars they would need from people like Carvana, your average person's not going to be able. I think right now it's like 12% is like the average that someone's going to get for an APR on a used car. For like average income, average credit, you're paying 12%.
That's
So
ridiculous.
imagine paying 12% on a car that 3 months ago you were like, this was 15 grand, and then now it's 21. Like, so I gotta pay like 600, 700 bucks a month for a 6, 7 year old car with
Yeah, pretty
sub
crazy.
50K,
Pretty
50K
crazy.
miles on it. That's
Yeah,
insane.
pretty crazy. That's just ridiculous.
Yeah, but our neighbor, my parents' neighbor, is the VP of finance at a Ford dealership out here, and he was just talking about how like he's like, yeah, man, he's like 9 times out of 10, people just buy new cars or lease them because it's going to be cheaper than them trying to go get something used, even though it might be cheaper on the sticker price because that used car APR is just like destroying people's budget. Like they're like, oh great. And it's like, okay, well, if you want that price, you got to put an additional 5, 6 grand down, which with credit card defaults going up, all that like consumer confidence down, no one has 5, 6 grand.
Yeah.
Just where they're like, oh yeah, let me just sure. Just prepare. I was prepared to spend 5, but 11 sounds great.
Yeah.
Like, no,
Yeah.
no one's doing that. I'm sorry.
It's also interesting if you notice. I mean, credit card companies have been doing pretty well. The outlook for what Visa and Mastercard that just reported last week was that
Hmm.
consumer is, from their words, still fairly strong, but at the end of the day they're uncertain of what the outlook's really going to be because of how tariffs are now impacting the consumer, impacting small business as well. You got to understand that kind of stuff will take a little bit of time to trickle down, but yes, credit card defaults are at an all-time high, um, and the U.S. economy is starting to struggle. You'll start, GDP's down We're seeing a lot of revisions in certain things, and even companies right now are a little bit afraid of giving, these outlooks for the next quarter because they're completely unsure as to what might happen. Like we've said, a tweet today, a tweet tomorrow could completely change the outlook of what's about to happen. So,
Yeah. And one thing to remember is we're at 20-year highs right now. We are at 20-year rate highs. So like I back in September, I warned everyone, I was like, if you can get that 6% mortgage, go ahead and get it. Because
it's only going to
and
go
you've
up.
seen it's only gonna go up, and we're seeing that now. Same thing with cars. That it's just not gonna get any prettier.
Yeah.
Let's see. ARM reported.
Yeah,
Did
they
they
dropped.
already report, or are they
Yeah, they
reporting today?
reported. They just dropped.
All right, let me pull those up.
They
Whoops.
are now down from that high here. They're now down almost 10%, down
Ooh.
$12.
Oh, wow. But in good news, they reported income or revenue of over 1 billion for the first time in its company's history. So shouts out to ARM for that. But it's the kicking the balls nobody likes. That guidance just destroy, because literally headline ARM stock falls after chip designer gives weak guidance.
Yep.
So for the current quarter, they were at 1.1 billion. We saw a 14% or 8% drop on Wednesday, advance 1.4% at close. Where is So they earned 55 cents on 1.24 billion against 52 cents on 1.23 billion. And just last year, they were at 36 cents on 928 million. Let's see. Ooh, okay, yeah. For the current quarter, ARM predicted adjusted earnings of 34 cents on 1.5 billion, and Wall Street was modeling earnings of 42 cents a share on 1.1 billion. Ouch. So that EPS and revenue outlook definitely did not help them whatsoever.
Yep.
So they came in under guidance, but that's going to be typical. Anything that has to do with manufacturing or design they're going to come under on guidance, or they're going to pull it completely. There's never going to be hey, I think this is going to go, this is going to go well. Like, no, until everything gets cleared up and the line is drawn in the sand, we're going to just see a lot of guidance pulled and adjusted figures coming out if we do see any, as we're seeing with even the big guys. And if they're not safe from it, what makes you think? What makes you think someone like ARM could be safe from it?
Yeah, if you take a quick look at ARM flow, last four buys were all puts earlier today and yesterday.
Ooh,
We do
yeah,
see some big money coming in, but look at the expiration date for those ones. Expiration for
yeah,
that's very far out.
2026.
The one that you guys are looking for, especially for something like this one right here, spot price at 121, right before close, half an hour before close here, expiration for Friday, right? So understand that if they end up going, if this goes up higher, this $116,000 that they spent would be at zero. But as of right now, with this, where it dropped to, this is looking at, they probably could see 100% return on this one by tomorrow if this
Yeah.
price at 113 holds. So yeah, that one's, I mean, kind of a gamble here, right? At the end of the, but I'm sure they might have known something. 100K isn't exactly the biggest number we see here on STAX, but can give you a little bit of an idea of what they're expecting for it.
I think one thing I've seen with the 100K buys is sometimes it's like a hedge against a position they might be in long term. So like they might drop 1.1 million on calls for 2026, but because they know that nobody's giving guidance, they're like, okay, well, we're going to see a drop, and maybe it'll pop tomorrow, but they'll probably have enough time to get out of that position with some profit before we see any type of significant movement where they're down 20% or something like that. We would have to see something very drastic happen in pre-market tomorrow.
Yeah.
That's for damn sure.
Yeah. Next one we got DoorDash.
All right, DoorDash. Let's
Just
pull
a
up
sell
there.
of some puts today, some selling of some calls that were unusual yesterday. Nothing, DoorDash isn't, I wouldn't say, the most liquid options to be purchasing. There was a $35 million purchase on it today at 177. Let's take a peek over at what's going on.
On the news side, we have DoorDash announcing a $1.2 billion 7 rooms deal, but they missed revenue expectations. This was an all-cash acquisition deal of a restaurant booking platform service called 7 Rooms. The British food delivery company Deliveroo also announced a takeover deal from DoorDash worth $3.9 billion. But on Tuesday, today, their earnings were at 44 cents. So EPS came in good, 44 versus 39. But their revenue missed by 6 million because 3.03 billion versus 3.09 billion is what was expected.
Yeah, they reported on Tuesday, actually, Tuesday before.
Yeah, so they're still up 21% on first quarter revenue from a year ago. Total orders were at 732 million for the quarter, an 18% increase. But analysts were expecting 732.7 million. So they missed by about 700K there. And they're expecting second quarter adjusted earnings before interest, taxes, depreciation, and amortization of 600 million to 650 million. And the analyst polled by Street Account expected 639 million. And their biggest thing is consumer demand has remained strong with engagement across different consumer cohorts and types, we believe, which is consistent with the typical season patterns that they see. So yeah, not a horrible earnings report, but it also isn't anything that you're going to write home to mom about or open up your E-Trade account tomorrow and double down on your position. Definitely want to see what happens with these acquisitions. Are they aquifers? Is it IP related? Is it to break into new markets? That's just going to be something we're going to have to track and trace, as hunters like to say. But I would say overall, like, pretty good report. I don't see anything that's making me turn my nose up at this whatsoever. Even with bad,
they're poised for growth.
Yeah,
that,
100%.
That PE ratio is definitely reflecting that 249 PE ratio. But at least where I'm at, I know a lot of people that are using DoorDash at least for a meal or two during the week, especially those busy with their jobs. It is something where they're poised for growth. Them and also like Uber and Uber Eats definitely become a part of people's routine nowadays, especially for those that are too busy to make food for themselves. So
we got a weekly buy on them too at 1250 for 155K on those 220 calls today. So we'll see how those are gonna kind of open up and act up.
Yeah. All right, next one I've got here, Oxy, one of Buffett's favorite, OXY. Nothing significant in terms of today. Nothing came in today. See a lot of selling of positions, but we do see some puts being bought. Price of oil's dropped quite a bit, hasn't it? Right?
Yeah, and they just reported 9 minutes ago.
Okay.
I think. So we got 77% or 77 cents versus the 71 cents expected. Revenue was not explicitly stated, but operational performance indicates strong cash flow generation. They had a net income. They achieved 766 million attributable to common stockholders. 1.2 billion in free cash flow. They reduced their debt by 2.3 billion. Production was at 1,390 MBOED, aligning with the midpoint guidance. So I'm assuming that's like barrels that they're producing, millions of barrels, I want to say. And then capital guidance was reduced by 200 million, but this is also reflecting operational efficiency gains. So doesn't look like they had a bad earnings call out either. So excited to see what is going to happen with them. But yeah, I know that the big oil analysts, they're all worried right now with the prices of oil just dropping rapidly and no real end in sight.
I'd have to say, couple things I like about it: low PE ratio, trading at some real lows over here. The thing I'm looking at here is this volume spike right here once it dropped down here in April. Very possible we can see some sort of Wyckoff accumulation zone in here. Wouldn't be surprised to see this over the course of the next year to 2 years bounce around in this blue box. There is quite a bit of supply up here at that 45 to 50 plus range. So, we'll see. It's reacted back up a little bit. I could see it trading close to that 45 before it bounces back down and creates kind of a zone. But, my another question is Warren Buffett going in and purchasing more? That wouldn't be surprised to see him decide to go add into his position here. And if that does happen, you can bet there's going to be a lot of people that kind of just follow the leader and add to that as well. So something to keep an eye out for.
Someone might get paid potentially. $36 puts were bought today, expiring this week.
But it didn't really move after, right?
Yeah, I know. That's the. I mean, I don't know. It wasn't a very aggressive position. Only 50K in premiums, but granted that they were $9 a contract.
We'll
so
see what happens tomorrow with it. Yeah.
Oh yeah, it's just chopping right now. I think they're just burning both sides of the candle.
Yep. What else? That's the main ones for today after hours. Let's take a quick peek over. We've got for tomorrow morning Peloton, Shopify. I think those are the two main ones I'd want to look at. Peloton, it's a terrible stock.
Oh my god, it's so fun to short though.
So quick thing about Peloton, and that's what they talk about is the CEO of this basically took a bunch of money and ran. Back when Peloton was trading well up, right? Oh, and here's a great picture of it too. Wall Street psychology of a market cycle. Guys, look at this. This is exactly what's going on. You got the peak, jumped around down there, came back down to the bottom. We're in that depression phase for Peloton right now. I do see it the only thing that's really saved Peloton stock every now and then is they have these talks about getting acquired. They do have a decent amount of infrastructure in terms of there are a bunch of these bikes and treadmills out and about. And so if some company is able to take that and convert it into something useful, right? Imagine if one of the big, Mag 7 companies was able to say, hey, we're going to take over this fitness space and Peloton's going to help us do it. We're going to upload some new software you guys download onto that old Peloton. And now you're a part of, let's say, Apple Fitness, or you're part of, decide that Facebook or Meta decides that they're going to come into this space and do something with it. I think those are the main hopes for Peloton. At this point, the company itself, I remember as much as they have all these bikes and things out and about, they're not doing too well. They're not making too much money off of it. But you guys can see here, very much like that, Wyckoff accumulation and distribution phase. And this, but basically it got its entire pump due to COVID, with everybody staying at home. So unless something like that were to appear again, where people are forced to stay home and gyms are closed, I don't see this headed up anytime real soon unless something major and drastic like that were to happen.
Yeah, I mean, it traded sideways today. Like if you look at the 5 minute day chart, it just like moved in a very tight range.
Yeah, we'll see how it reports tomorrow. But overall, even their margins are terrible too. You'll see their last quarter's margin was a negative 13%. Their revenue is only about 600, almost $700 million, and it's hasn't been doing too well since. They were, back in 2021, they were $4 billion. They're making $4 billion. So terrible, terrible. The other one I had here was Shopify. I think Shopify
Elusive
might.
of business.
Actually, let's real quick. I can
Shop.
show you guys Peloton in here. Peloton, nothing in terms of recent.
Oh yeah, no. The last thing that was bought were 429. On 429 calls were bought. I think 750 calls were bought. Shop this week is just bearish as all get out. We had a $1.52 million $90 put for September 19th, 2025 on that expiration, 1,500 contracts at a $10 average. All of this came in the same day. We had a $75 put bought as well, 198K, 3K contracts, 66 cent average. And then we had an unusual buy at 10.59 for the $75 puts where we saw 396K. So it looks like someone was doubling down on that $75 position because we got the same expiration date for next week as well. So about a half a mil on puts for Shop.
Yeah, if you just look at the week, filter for the week, it's just bearish as all hell, like you said.
It's literally 2 million, and we can just call it 2 million in puts dropped and about a $15
And there
difference
has
in
been
strikes.
no purchasing in the equities side of it since middle of last month. So
Oof.
not great. Not great.
Today was a weird flow day, though. It was a very weird day on
I think
flow.
I think it also had just to do with the fact that we're waiting for the Fed to give that announcement that they're leaving everything unchanged.
Yeah, exactly. So
I know a lot of people looking at that. Um, Coinbase. We look at Marathon, Mara, maybe SoundHound, DraftKings, and Affirm. I think are worth looking with. And TTD, Trade Desk. Let's
yeah.
look at Coinbase first. I know.
So today we had an unusual buy on coin.
Oh yes, 2 mil.
Yeah, 2 mil on the 220 calls. But these are pricey, $20 average, with a August 15th expiration attached to them. This is one of those ones where you could probably play a similar. If you find something with open interest that's within your budget, you could definitely play this expiration date with something that has solid and open interest in it, at least. I wouldn't be too worried about volume as we saw with Tiva. That whale exited shortly after we got an alert, but the open interest still remained there. So I think that's one thing to kind of look out for is because the volume is greater than the OI on these 220s too. OI is only 767 against 1,000 volume that they put into it. So that's just one thing to be aware of. But again, that's an opportunity for you to go find something within your budget and play something maybe further out of the money and just play that momentum as well, as long as you're also tracking the news of Coinbase, because obviously if they report something bad,
Yeah.
you will get burnt.
Yeah, and crypto at this point, I mean, they're not exactly hurt by tariff talks, but at the end of the day, they still react like the market.
Yep.
They are very sensitive to that uncertainty of things and uncertainty of the money markets here. So I've noticed there's not very much buying in the dark pool or in the equities side of things. And if you take a look here, I like to filter for the buys. Oh, let me There we go.
See anything
Not much
interesting
going
on
on in the equity over here. If I filter for just the buys, right, this blue one, big money, just really sticks out of all of them. Yeah, we've got some puts coming in here, got some calls. Actually, a lot of these since the beginning of the month happen to be calls. So again, remember though, Coinbase makes its money off of the amount of volume that's traded of Bitcoin and of these cryptocurrencies. Yes, it matters if the price of Bitcoin is high. Obviously, more people are likely to go be, that means people have been purchasing, people have been making trades on their platform. But yeah, we'll see. One thing I did want to point out too here on my trading view, I did a video a little bit ago about where all our insider trades were alerting us of, and you can see here, of all these little red circles I put on here are basically where their insiders have been selling. So, they looked at it as that 200 and, high 300s, low 300s, high 200s, and a few here in the 220 range. The insiders were willing to let go of their positions, meaning that, maybe they feel like it's high enough or they know something that might be coming. So
definitely.
what else? Let's just look at Mara, M-A-R-A.
What do we got? Anything interesting in news with Mara?
It's just kind of been down in this range, a little bit of accumulation. Kind of came back down into but the volume down over here, it's decent. Let's take a look at what STAX has to say. A little bit of activity. What's up?
So Mara Holdings cut. So Compass Point just came out and basically cut their Marathon Digital stock, and they bumped it down to a sell rating and cut its price target to $9.50 from previous $25 target that they gave it.
All right.
They said Mara faces unsustainable cash burn and potential dilution while trading at a premium to Bitcoin, and that's what that's what the Compass analyst team came to a conclusion of. And they also noted broader weakness in the HPC sector as AI infrastructure stocks lose favor with investors as well. So, ouch. Like that is not good news if you're holding on to Mara.
Yeah.
But that also would kind of make sense why we're seeing such aggressive put buys on CORZ and others, because those would be some sympathy plays or trend plays that you could follow as well.
Yeah, definitely be careful with your open interest on these types of names. Okay. Let's got Soundhound, SOUN.
I know something interesting just happened with them. They're always getting like some partnership or someone's like injecting money into them. What's going on with Soundhound? What's driving growth? The voice AI specialist. Soundhound.
Jeez, what happened last quarter? Last quarter, their revenue and net income, their net margin was a negative 748%.
Jesus.
I know last earnings, 2 earnings ago, started to make that run up because of the whole AI hype that they had. But
oh, wow. So it looks like in the last reported quarter, SoundHound reported a loss of 69 cents per share, significantly wider than the 6-cent loss recorded in the same period a year earlier, by a wide margin of 527.3%. But their revenue jumped 101.5%. So their last quarter was that is the definition of a mixed bag right there.
yeah. Chart
What's
has a
the
little bit of some Wyckoff characteristics, but it's hard to tell. I mean, if we can break up, there's a gap up here at that 12 to 13 and a half range. There also is a little bit of a gap below here too, right where we're at. So could see it come down a little bit, fill that gap before it heads up, even if it has positive earnings.
Yeah, I think so because I'm not really seeing anything. NVIDIA, Perplexity, Lucid Group, and LG, and then they're big in the restaurant space. These partnerships underscore
And
SoundHound's
overall, the
leadership.
buys all happen to be calls on it, and they're all poised for July, September. Yeah. Even though this shows a lot of calls on the buy side, I don't know about it right now. They definitely need some news to push them a bit higher.
Well, I know one thing is they expanded their collaboration with NVIDIA because they integrated with NVIDIA AI enterprise tools to enhance its voice AI capabilities, and
That's
it
what pushed it
enables,
up. Yeah, that's what pushed it
yeah,
up.
faster, low latency processing, real-time retrieval, augmented generation, and scalable AI model optimization. So that might be the catalyst of why people are buying calls. That it's just that AI hopium is just so addictive, apparently.
Yeah. Well, you put Nvidia's name in there. That's gonna boost you.
100%.
Let's take a look at
Even if
Affirm.
they are a bubble.
Yeah. Affirm. The buy now pay later.
I don't know what. There was a weird buy that happened, dude. On the 6th, we
Mm-hmm.
had 1.7 million dropped into $60 calls,
And then a sell
which
at 75.
it's just so weird. Like this is someone someone was like, "Oh, they must have thought this is like a new AI stock and not a a buy now pay later finance platform, basically."
Well, if I just saw something else about how people are now financing their groceries through these
Hmm.
these split payments. People door dashing and deciding to split their Chipotle order into four payments of $4 or $5. Like, is the consumer hurting that much, or is that just kind of a new wave of what younger generations maybe are doing? Because I mean, it sounds kind of ridiculous. That's the way I look at it. And
Yeah.
the companies that are poised to benefit from this, such as Affirm, there's a couple of other payment plans out there, payment services like that. Um, my trading view, I've got this kind of actually as a Wyckoff accumulation. We are in these possible last points of supply. Um, so I actually could see this headed up a little bit more, especially if it is a situation where people are continuing to use these types of services. And back during 2021, etc. I mean, Affirm was trading at a high of 176 at some points too. So, could we see this headed back up further? There's a decent possibility, actually, in my opinion. We're seeing this last point of supply, and it dropped back into the range a little bit too. So,
Yeah, I mean, if they deliver good earnings, and they have strong consumer base who's actively using them, which it sounds like they are when you look at everything you can use a firm for nowadays. Um, I don't see, I see 75, $80 as a fair price target
yeah,
from its current
I
level over
agree.
the next year, maybe.
I agree with that.
We could even see it. I think we could even see like 65, 70 by end of year with these guys. I don't think that would be out of the, because when I'm looking at this chart right now, it just looks like there's a lot of, like we saw a pretty heavy sell off at that like $80 wick,
Mm-hmm.
like at the top. So, and
Well,
it looks like around,
it already dropped 62% from there.
Yeah,
right?
so but if you look like where where those candles are starting to kind of accumulate, you can see like there's those could act as levels of resistance, and once they're reclaimed, act as new levels of support.
Yep.
So if anything, you could just look at it as this thing has been creating higher lows over the last 6 months to the year,
Yep.
and it is kind of waiting to break back out back to that $75, $80 a share level.
Yeah, and we're actually at a very heavy level of resistance right now. That 53, 53.28
Mhm.
previously as support, support, resistance, resistance, support, back to resistance. So, if they deliver a great earnings report, there's a possibility that you could see this head back up toward that 60, 70, 80 range. That wick up there from the past as well. That 83 range is going to be a solid resistance though, so keep that in mind.
Yeah, 100%. But also, if it does blast off like that, we got to remember. I mean, I don't think we have a lot of long-term conviction that's coming in the last month, because if we look at anything from this month, from the 1st to the 6th, we didn't see any notable activity until the
Yeah.
24th in terms of buys. So, and all of these are for June 20th.
Yeah.
So we're either expecting a really aggressive move up to that 60, I would say $65 range, and we see a sell off when it hits around 63 to $65. Or we're gonna head back down to that previously formed support from years before. And that will, again, it's just gonna have to start its steady climb back up that it's been trying to make.
All right, last but not least, let's talk about DraftKings,
This will be a good
DKNG.
one.
I always think of Donkey Kong during this
I do
pivot.
too. The amount of times I've been like, is this Nintendo?
Donkey
Like,
Kong. All right. Um, Not too much equity activity.
the last buy for equity was on the 17th of last
Yeah,
month.
same with options flow. It's all been from last month. Nothing really right now.
Yeah, our last buy
Um,
was on the 25th, and these were $33 puts. We had 533.8K dropped on these, giving them 2,900
yeah.
contracts. In terms of news, let's see if they got anything going on other than Kevin Hart giving commercials still.
I mean, we are in NBA playoffs, hockey as well. The thing that I've always found, again, with online gambling, gambling in general, especially nowadays, you always see those advertisements where somebody took like 10 or 12 possible, different props of this player scoring this many points or this unlikely event happening, and then they suddenly take a $10 bet and turn it into hundreds of thousands of dollars. Like, in my mind, how is a company sustaining themselves in these types of situations where, yeah, you might make a bunch of money off of silly bets that people make with $50 to $100 here, $50 to $100 here, but if you're paying out those small tiny percentage unlikely situations every now and then, that very easily cuts into your revenue, cuts into your profit margins as well. So it's you know I understand it's a huge industry. I understand it makes lots of money, but it's those types of losses that they have to eat that I believe are eventually cutting into their situations, cutting into their profits too heavily. And our tape here on STAX doesn't show anything extremely promising, or at least anything recent as well. There are a few from early April where they're purchasing for end of next week. Um, that buy of the puts from, was it 2 weeks ago, the 25th over here, that might be a earnings situation, 500K, fairly significant. Um, but a lot of these are pretty small.
Well, one thing I was going to say, so kind of like how we saw with CBS, I will say, by the way, our last earnings predictions, I think we almost got all of them right, by the
Yeah.
way. Yeah, because I was
Good to
like going
review.
through them and I was like, wait, I think we literally talked about this when I was like reading the reports. I was like, me and Eric like mentioned this multiple times, especially with CVS. So with DraftKings, um, one thing you can do is if you don't see options flow, you don't see a clear direction, you go and look at what are their peers doing in the space. So we already have some people who have delivered. Rush Street Interactive delivered year-on-year revenue growth of 20.7%, beating analyst expectations of only 0.5%. Excel Entertainment reported revenues of up 7.3%, topping estimates by 1.6%. And Rush Street Interactive traded down 5.4% following the results, while Excel Entertainment was up 4.7%. So, again, it's just one of those things where you need to look at the sentiment of how investors are looking at the space. And right now, um, there's been positive sentiment among investors in the gaming solutions segment, with share prices up 12.7% on average over the last month. And DraftKings, unfortunately, doesn't fall under that, with only a 6.1% increase during that same time, and is heading into earnings with an average analyst price target of $54.14. So all I would say these are pretty positive things. Um, Looking all things considered, I think it'll be interesting to see what happens with their earnings. But I would say this is probably going to be a beat, and we'll see a 4% swing in either direction. So we'll either see them lose 4% on upon reporting, or we'll see a 4% pop. But I don't, unless we see some significant volume, I don't really see an aggressive like move on this earnings tape.
All right. Guess we're gonna have to next week come back and double check our predictions and see
I
what
think we
that
should
is. I
start
think
keeping track of
yeah,
these.
let's
Like
do that.
keep
Let's do
track of
that.
predictions. We'll keep track of like, and then what we can start doing is I'll start coming up with some theses that you guys can dig your teeth into through our newsletter that I do with Options Flow Daily, which by the way, that'll be dropping here in about the next hour and a half, our daily flow recap from today. No midday flow cap or flow recap today, because like by the time I was gonna do it, I think there were only like six big money buys, and I was just like, what the? No, I'm not making a video about six random buys that are all just hedges against their own positions, because that's what they were. So yeah, I think tracking this stuff would be fun. You guys can also leave suggestions of companies you want us to like dig our teeth into as well. Because again, we can sit here and kind of gab all day about what we're interested in, but the whole point of these is to bring you guys value. So the more tickers, the more companies, sectors you want us to look into, the better we can continue to make these shows as we run them on Wednesdays. But I do know tomorrow we have jobless claims coming out. So be on the lookout for that. If remember, if jobs come in hot, we're gonna see a nice gap up. Jobs coming cold, we're going down. So it's the same thesis every time we get these jobless claims, but it is something that you just want to keep track of because it will set the tone for other jobs reports we're gonna get throughout the month.
Yeah. Quick update for you guys as well. Our Discord is linked to our STAX software, and we've actually added a couple of things in here for you guys. Max's channel here, TG Trades, is on here. I also had us add our breaking news spot in here so that you guys can get up to date on what's going on in the markets. We just saw this at right before market close. Trump won't budge on China tariffs, so we'll see. Even though they're at the table now talking, we'll see if that makes an impact on overnight futures and things like that. We also have our education channel where all of our videos are being posted. So, for example, today, on our YouTube, the moment it gets posted, you guys will get a notification on here as well. And again, like I said, Max does a great job of letting you guys know what's going on in the markets, doing a quick analysis of what's going on in the tape. And he's doing these on the daily. Every single day the market's open, he's going to output some of these, a couple of videos here and there, giving you guys an idea of what you guys should be drawing your eyes to. So, that's a big part of where the value of STAX and what our software is able to do. And for those of you that are new, this is a great way for you to familiarize yourself with the markets and what's going on. Because, I understand some of us are looking over at these, these buys and sells and have no idea what exactly they mean. Max is definitely here to help you guys, make sense of what it all means. A lot of information here for you guys. And as well, you guys get an access to our main chat just as well, STAX support and testimonials, club profits, earnings. These are all things that, for example, today we're going over earnings. You could take a quick look at and download that image for yourself so you guys have an idea what's going on. Sorry, I didn't mean to cut you off. Go ahead, Matt.
Oh, no, you're fine. I was just going to say, the one thing about my channel is you're never going to see call outs. My goal is to just give you guys enough information to make your own informed decisions. But I'm also not just calling random stuff out. I'm trying to teach you guys how to identify patterns and trends for profitable opportunities when it might just look like noise or random buys. The whole point is to give you guys some context so then you can go, hey, you know what? This makes sense. Or, hey, you know what? Maybe I can fade this because this is just a rebalance or a hedge or whatever the case might be. And then obviously I do my market recap podcast where I just talk about what happened in the markets and I put it in layman's terms. So, I mean, I'm not super technical about it. My goal is you could show this to your grandma and she'd have an idea of kind of what happened in the stock market for the most part and maybe get a couple laughs out of it too. So that's really the goal of my channel, and my goal and role within Investor Central Club is I'm the context of I just try to bring context to some of the noise and help you guys identify some really good opportunities, kind of like that Tiva. But again, as I've told Eric, my call outs, you'll have to get kicked in the teeth. Those Tiva calls did not move for days. And then one day they were up like $1 from what our entry was. And yeah, and by the way, you wouldn't have been able to explain how, because I think the highest volume I saw during that period is we ended the day with 32 contracts traded. And I think me and you were 6 of those. So so really there's been 4 people holding contracts, but it's really just me and Eric holding 4 of those contracts together.
Yeah, I mean, but a part of it, Stacks AI, you guys can also check out. I just did our back testing for the last few months. Take a look at that. There, that basically reviews what's been going on with our Stacks AI callouts. In the description box below, I made sure that we added Max's YouTube, Max's Substacks, our Stacks Beehive subscription for our newsletter, which goes out, which reminds people not only about these videos, but a little bit of updates on the markets as well. And we do have 1 or 2 spots left for our 125 discount code. Our usual price for Stacks is $99.99 per month. You guys can get that first month for $25 only. Huge savings. Max and I were talking about how there's a lot of great flow software out there. But one of the main things that a lot of people, that are using Stacks, they tell us is that some of those happen to be almost too overwhelming. They've got too much stuff going on. Yes, they give you the data, but you have no idea where to go, where to direct your attention to. And another thing is some of them are charging upwards of $200 a month just for you to have access to them. So it's a great opportunity for you guys to get in on things, start learning if you're new, or supplement your trading, supplement your data with what Stacks has to show you. That way you get a better idea of what's going on in the markets and where the big money interests are putting their money. So all of our social media links are also linked down below. You can always follow us, Instagram, Facebook, obviously YouTube and TikTok and things like that. So, don't miss out. We're always trying to help you guys out, trying to make sure you guys have the information in front of you. And our hopes are that you're able to use this to achieve, whatever it is you're looking for, whether it's financial freedom, whether it is trying to put a couple extra bucks in your pocket to treat your kids out to ice cream. Whatever it is that you guys are aiming for, we're happy to be a part of it, happy to help you guys out, and teach you guys what it is you need to learn about these markets.
Also, let us know if you want us to do a $1,000 account challenge. And not so much a challenge, but just we'll start with $1,000. Myself and Eric will come up with like 1 to 2 plays a week that are going to be longer term. So these aren't going to be 500 percenters overnight. These are going to be for someone who might have a 9 to 5 job, can't stare at charts or their portfolio every day, but you want to check it once a week. These are going to be the plays for you. That Tiva call is a perfect example of that. You could have bought that Tiva at 153 and literally not looked at it until today and made 98% of your position because the bid and ask was just really far spread out. Like mine, I sold mine at like $3 today, but the spread was 294 and 310. So I put a $3 bid out there. And on Robinhood, it'll tell you the likelihood of the fill, by the way. So you can always adjust that price to if you as long as you get a medium likelihood fill, it's most likely going to fill out if the open interest is there. But yeah, that let us know if that's something you guys would be interested in because obviously some of these stacks plays you see like a $2,000 average for the contract. Obviously, none of us are spending $2,000 yet, at least. So I think maybe finding those sub $100 contract plays is where that sweet spot's going to be between volume and value almost.
Yeah, comment in our chat box. Let's get something going. Comment 1K in there if you want that $1,000 challenge. We'll start talking about how we're going to put that together. Maybe we'll do a short 10 to 15 minute live, once or twice a week just to update people on that position. But yeah, It's definitely something we've been discussing. Stay tuned as well. We're going to aim to do this again next week on Wednesday closing bell, midweek update. That way we get an idea of what's going on in the markets, especially. And what we'll also try to do is we'll do a recap of our earnings predictions from today, just to give you guys an idea of, how accurate are we going to be. We always like to have the data. Obviously we're not going to, it'd be amazing if we're 100%, but that's the markets ultimately. Even if things hit and beat earnings, price might go down. Even if they miss horribly, you might see price jump up. That part doesn't have to make sense, but we can at least do our best to present the data to you, what the tape says, and what our analysis of those companies happen to be.
Yep. And next week, you don't want to miss it because we will be recapping CPI, because we have that coming in next week. And then we will also probably give out some predictions for initial jobless claims and retail sales as well, because those will come out on that Friday, I believe, the 15th. So yeah, just make sure, don't miss next week because we'll be going over again those earnings plays we discussed today, earnings plays that are happening next week, but most importantly, CPI, which is going to be a big thing going into, what is it, June 7th is our next FOMC?
Let's see.
I want to say. Or no, not June 7th. June. I think it's June or July, I want to say, is our next FOMC.
I'm trying to look it up right now.
So, because this is, guys, the important thing is for FOMC meetings, you need to pay attention to CPI, PCE. You need to pay attention to these reports because then you'll have a really solid pulse check of what to expect out of these FOMC meetings. The reason why me and Eric kind of knew it was going to fall flat is because, well, we track this stuff like a hawk. So it's kind of just being able to put the numbers together at the end of the day.
Next FOMC meeting. Let's see, we just did the May. see calendar. There we go. June 18th, 17th to 18th.
Okay. Yeah.
So we got some time.
So we got some time. We got some more CPI and PCEs to get through. But again, the further out you start to pay attention, the little more clear that picture becomes as we head into those meetings and those key events as well.
Yep. All right. We will chat with you guys in the next one. Hope you guys enjoy this. Please leave us a like, subscribe. Go subscribe to Max's Substacks. There's a lot of information out here for you guys. And again, if you guys have any questions, this help@investorcentralclub.com. We're always happy to help answer some questions, direct you in the right place if it is that you need. Okay? Have a great rest of your guys' day. Happy trading. We'll see you guys in the next one.